Hello, you sexy sorts. Back for another one. If you haven't seen the first video, then don't worry about it. This is the main video on how I trade. Obviously, looking at all the indicators that I use and way of thinking. It might help you in some way, as I've mentioned before. I cannot show you the thousands of pounds that I've made. I can only give you my expertise and what I've learned in terms of trading and how I've simplified it. So if as I say, if I pop off in this year or next year, you can have a look back at this and actually take it on board. But I just thought I'd put it in the open before it happens. And if you want to, if you want to take some advice now, you can, or if you just want to go do your own thing. But it doesn't really matter, as I say. So let me just go slap on just around a bit of the market. Obviously, I know what's going on here now that I've seen it, but it doesn't really matter. Let's just go here. So when I look at, let's say, the monthly, let's just go from what I went on before. Say here we've got nice bearish structure, as you can see. What I like to look at is breaks of the lows or even wick retests, because something I used to think would happen in this environment here where it wicked the low, that was a nice sort of push in the other direction. I mean, it's true, but I thought it would be like a, breaking this high, and that's a mad reversal, because when you think about it, if someone's in a buy anywhere around here and they got a stop loss, they are getting taken out. Let's be honest. So the market doesn't really want to go very much lower for the time being. But as you can see, it's held on this supply here. Supplies are, the bearish part of the market, and demands the bullish part. So this is a order block, or a set of 3 order blocks, and there is a wick here, which is another internal order block / refined, which you can use to get more refined trade ideas, maybe even more aggressive, because obviously if you're looking at the surface entry around here and you want a nice tight stop loss, it's probably going to go a bit further. You might see some confluences, but realistically, the further it goes into the refinement, the more aggressive you can become. You can wait for the changes of characters, or if it's swept liquidity 2 or 3 times and it's still holding this demand, you're in for a good win there. But you've just got to be careful of the flip between the buyers and sellers. I have to make sure there's something going on there for you to indicate there's a shift in momentum. So we've obviously got the initial wick there, followed by that being the lower low, and then this being the lower low again, and then we've got a higher low forming somewhere around here, which I don't like this highlighter, but it's pretty obvious there's a premium mitigation past the equilibrium here, and we're looking for some sort of reversal either around where we are now or within this supply here, as everything above that supply is pretty efficient. I like to use inefficiency, which are gaps in the market, and we can look at that where the price has just pushed away and it's used as fuel to fill the market area, and the price will normally go back into this area to fill it, either partially or fully. But here it's obviously filled it pretty much fully. There's a bit more inefficiency here as well, so we can look at that as a target for liquidity. But it won't always occur. It won't always fill up to here every time. So that is a nice area. But anyway, we can move on. We can go to the weekly. That is bearish. We're looking for some shift in momentum, and we're looking at maybe something here to tell us that the market is changing. So obviously we'd like a weekly change of character. Ideally, we'd like the sweep of the highs, so all of the buy positions in the market get involved, and they put their stop losses here, and then we want a sweep of the lows, so anyone getting in short positions around here will get taken out. and then the buyers will get taken out as well around here, which will be nice change of hands, but we shall see. And then what we'd like to look at now is either buy continuations, just keep going, because realistically we're predicting some sort of bearish momentum, but we have a break of structure, and we have a break of structure, and it just seems to keep going up. So the order flow is still bullish, and even though we are predicting bearish reversals around this area, we can technically still look at low probable buys within this zone, providing it has some sort of narrative or understanding as to why you're doing it. So for instance here, although we've entered premium, this demand is clearly holding quite well. I like to use these little boxes. I have a lot of other tools as well, but I try and keep it as simple as possible, just to not overcomplicate things and only use them when necessary. And obviously I don't like marking up analysis all the time, and keeping it nice and simple because I do this all the time. So we've obviously got this extreme area mitigated within the zone. It's wicked in nicely as well. Technically we could look for some buys around here, but you know, if we're looking at for the sake of high probability, we just want to wait and see what happens on this time frame. So it's continued. There is the change of character bearish. So we've had as you can see, a weekly change of character within this zone, shifted all the momentum bearish. We can look for some nice high probable plays in the premium price action, and look what we've got here. We've got some buy side liquidity, which is very nice because that is just sellers in the market putting their positions in, or pretty much anyone up until that point and below all have liquidity pools. They're all a liquidity target, and even these two here, so on the lower time frame you've got some nice liquidity. So, and it won't always mitigate it, you just got to be aware of the liquidity in the market. So that's where the patient element comes in. Sometimes I like to draw where their stop losses are. The stop losses all around here, so realistically this whole pool can be swept into this nice wick, which has been unmitigated. There's some fair value gap or inefficiency. There are the higher ones up, but I'm just looking at it realistically. If it's going to go any higher, yes, it can wick into this area, but you might want to look at it being a sweep of liquidity and a continuation. That's where the market gets you. You have to be neutral sometimes, even though you think it's going to be, heavily bearish and everything. If you don't adapt and look at it from the other perspective, sometimes this could just be a sweep of liquidity. The amount of times you see these changes of characters and internal initial positions, and all it is it's just another trap. And if you look at the high time frame, you've got this here, you've got this nice like wick it's gone into, and it can just blast forward. So just be careful when you do when you trade with these kind of indicators, and you think about all of the confluences, because sometimes when you lose and you look back in hindsight, you realize, probably shouldn't have done that. So let's go forward anyway, see what is going on. It seems to have respected that supply quite well. So the supply it came off was a flip, so that was a nice flip there, where the market reacted from this demand, and then it pushed past the demand and created this flip order. So there's a few things we can do. We could set a daily order limit if we really want to, or we could have a look closer, because now we've got confirmation from this area that it is bearish and it's continuing bearish. There's a bit of reduced risk in terms of it being shorts on the hand now, and we can look a bit closer to maybe get involved in a 4 hour here, or wait for the market to come up, sweep some of this liquidity, maybe even mitigate this refined extreme order, and go from there as well. So let's see what the market wants to do. It seems to just be dropping off the face of the earth. Very nice. Happy days. So we haven't caught anything there. It is gonzo. It's fine. I mean, that's a couple of days. But it's definitely bearish though, let's be honest. I mean, on a whim, you could probably catch a little counter here, but there's just no point, is there? You want to wait for the pullback, and we're just going to have a look, see if it changes. Alright, so we got a nice buy here. I went a bit too far, sorry about that. Doesn't really matter. This would be a counter order flow trade anyway, so this is counter, but we've got the daily change of character here. So we got the sweep of the highs, because I got this wrong last time. I said it the wrong way around. I'm aware of it. I don't really care. Sweep of the lows, and then this has been wicked. So this previous low has been wicked. We've got this further potential mitigation there. This isn't as high probable as the sells in the market right now, but we have created a lower low on this time frame. See if it does anything here. We have created this lower low into the leg, into the extreme, and if we are looking at potential pullbacks with continuation, this would be an area, or it's a very strong demand area as well, as we've seen. That fell off the face of the earth. I didn't really catch anything on the daily. If I'd looked a bit closer, maybe on the 4 hour, probably could have found something of relevance. Let's have a look, see if there's any breaker structures. Sorry that I'm jumping back, it's the ADHD. But yeah, anywhere here, I mean, that was the flip it went into. It's created the change of character here, the premium, maybe this one here. So that is a nice flip on the 4 hour. That would have been nice. The wick here, didn't like that. Breaks. This one here potentially. That would be nice. It's just 4 hour supply. Very, very, very easy, simple stuff. Not really no like further confluences, no bouginess. Just following order flow on the 4 hour. Get a few 1-3s out of it as well. So you could have done 6R here. So yeah, this is less of the back testing, more just showing you what I'm doing now. You know, I can do back testing sessions another day, but this is just showing you, if you didn't want to wait for the high probable setups on the daily, 4 hour order flow is enough. And if you really want to, you can get involved in the 1 hour just to make sure. I mean, I'm sure there was a 1 hour here. As you can see, it's kind of changed and everything. Probably wouldn't have caught one on the other one, so it's up to you. But what I like to do is get in that entry and then getting the re-entry. That would have been 5R. That probably would have just caught the 2 of the 3. And right here we've got the nice sweep of liquidity on the daily, and we want to look at the 4 hour shift. So we want the highs to be taken because the lows have been taken here. Any buyers in the market have been swept out, and we've swept liquidity on here as well. Sometimes I like to look for the daily to close bullish as well, so the candle body is still inside the area. As you can see, that's very nice. We've got a close there, and it's looking like it will probably close here again. I'm not going to predict the close. I'm just saying, you know, we've got the nice sweep of liquidity, and there is potential. I mean, anywhere here is kind of a valid setup right now, to be honest, from this kind of buy to sell, providing my fixed entry covers everything. We've got a nice 1 to 2 here. So let's have a look, see what goes on. But we'd like to see the change of character for a better play. Realistically, we want to see this push up and come back into this area, do the 2, and maybe even catch a 1 to 3 on the 1 hour as well. So let's have a look at that. I mean, it's changed character now. May have tagged in to the entry, may not. But that's on this nice 4 hour. Order flow here. It's very nice. So let's go on the 1 hour. I don't know how far I've gone back. You can either enter from here because it's changed and it's a nice easy sort of play. I mean, it's mitigated the halfway point of this order block as well. So if you look at this, I like to get the halfway. When there's a big order and you want a tight stop, you can sometimes go halfway, and that's a 60 pip anyway. But right now we can always wait for the change of character, so I'd like to see another sweep of the lows here or some sort of wick liquidity, but you're not always going to find it. So, you know, sometimes if you're doing like the 1 to 2 like this with a 60 pip stop loss, realistically you just want to look at you know, getting into the trade, because there's plenty of stuff here. You know, we could go lower, we could wick into here, we could wick into here. It is counter, it is, you know, lower probability than a pro trend high time frame continuation, but you know, you wanna look at it realistically. Do you want to take the trade or not, and does it make sense? And if it makes sense and it works, then happy days. Let's see what happens here. Interesting, very nice. see what goes on, see if it goes lower or higher. Yeah, so it's mitigated that low. I'd say now, to be honest, because I'm going to keep going, those two lows, sell side liquidity into this extreme. If it is going to pull back from any point, it will be from there, because it is GU, and we've tried to follow order flow, because I've learned that with GU, following order flow is the best thing. 4-hour break of structure, get involved, but it does like to sweep liquidity and do extremes. So we've got our decisional trade here, which technically could have worked here, if we got involved or whatever, but we tried the re-entry. There was no confirmation on the 1 hour either, so there was no change of character or anything. We just slapped it on as a re-entry. We liked the pullback and everything, but it didn't work, so that is fine. And now we're looking at the change of character on the 1 hour from this 4-hour refined extreme. So we've got this refined extreme sweeping all liquidity. It could go from anywhere from here. Let's have a look on the 1 hour now, see if it's changed character or flipped or done anything. So, I mean, there's probably a fractal change of character here, but when that happens, it doesn't really mean anything. It just does its thing. So let's have a look where it goes. It's respecting that supply. Might flip that supply. Yeah, so I was just going to say with the flip, there's a nice flip point of interest, but it hasn't actually flipped yet. Whereas now it has, so yeah, always going to be conservative with that. I mean, right now we could look at a few things. There's this nice order block. We've got the change of character now finally. So that has swept the highs out and it's swept the lows. That's a nice move there from the refined. So there's a few things you can do. This is the decisional. So we've already already lost the first decisional, or we got the extreme here. And there's two ways to look at the extreme. You can look at just this refinement, or you can look at the 3 blocks there. So there's a few things you can do. First one is put 230 pippers on. Let's see what goes on here. So we've got, slap that. So we've got the 230 pip trades, one overlapping the other. And let's have a look, see what goes on. I'm just going to put it back to the 4 hour now. See if we can get a nice counter pullback. When they enter the market and they go off, we'll have a look. Very nice. So it lost the first one. The second one, we have done 3R. So I mean, we're at 1% in profit over 3 trades, which isn't great. There's another thing you can do now, is leave it in to run, but it is a counter trade. So let's have a look, see what we can get out of it. I mean, if you want the bulls, you could go to this high. That's a 6R there. That would be quite nice. Lost 2 previous trades. You can either just conserve yourself and get the 3R in and out, get the 1% and leave it, because it is all counter. Or we can have a look further at some potential 6Rs going on here. See if it flops back down into the entry nicely. Yeah, came right back into the entry as well, as I would have predicted, because it likes to do these things sometimes. It likes to literally tap in the entry. As you can see, you've got this entry here and this extreme leg. Sometimes if you want to hold a position and you see it's going to mitigate something like this, don't break even. Keep your position open, because the main thing about trading is you'll lose. If you're going for longer trade setups, you will lose because say for instance, I've lost 2 trades there. The psychology of not backtesting, most of you, and I have done it as well, with break even, I just got to, make sure I don't lose again. I can't lose again. And it would have broke you even and flew off and just done a madness. So, sometimes it's good. But we will see. There it is. Whoom. Absolute rocket. I'm not even going to lie. If I was in this position and I saw that go off, I would not take profit here. If I was here and we had probably, what is that, news event? I mean, you can't close a news event anyway on some funded accounts. But I would wait and do a trailing stop. So this is something I like to do when, obviously we've had 2 losses. We've kept our position open here, and we are looking at a swing trade. So obviously right now I'm looking at this as the next point of interest for a reaction. I'd probably close it somewhere around where it is now, but I'll show you what I do when I do trading stops. So let's go on the 1 hour. You want to look at the wicks, and you want to look at the reactions and where the points are for potentially catching a reversal. So there's a wick here in this area, and there's a wick here, and it hasn't created a new low, but there is one here, and you can get a bit more aggressive if you really want to. So if the market goes any lower than this previous wick, I'm taking my position. But if it shoots up, I get more profit. It's a win. You know, this is a psychological game of, it's very easy to do back testing, but to do it live is a bit different because you want to look closer and closer, and you want to get, you know, closer sweeps and everything, and sometimes it will just ping off. Let's have a look here. Oh, wow, nice. I mean, it's a bit laggy, but I would have probably took this low here. This one, how many R is that? So within this one trade, we've done 8.78. So it's 6.78 total. That is all right. That will do, wouldn't it? Obviously, this is only experimental, and it makes sense to have done that as well, because here I could have took the 1 to 3, nice easy one. So there's that. But that is literally just before news. I mean, you could have broke even before news or whatever. I would have let that run to see this low it's made here. So there's the demand. It's reacted off this demand here. So we've got this like nice 1 to 3. Anything lower than that, I guess, you still get your 1.284. You've got this break of structure here. So anything lower than this area, just keep it, I guess, on the 1 to 3 right now. And then you've got your 1 to 3 locked in. So sometimes you can mess about with your risk, providing when it reaches the 1 to 2, which is kind of here, you got a nice 1 to 2. That would have covered the 2 previous losses. It's reached this area, and it's gone up 1 to 3. May have took you out here. You never know. It came very, very close. This is where the difference between edging your bets and risk management is. I mean, I'm still managing risk because it's the same amount. There's a 1 to 2R. You can probably keep that in. When it does 1 to 3, I've moved it up and fixed that position. And then you've had the massive news pump, and it makes sense to have done that in that particular environment because we've had the massive swing change, we've had the change of character, we've had the extreme entry, we've had the liquidity, we've had the pullback, we've had the confirmation, and we've got the target, which is this supply here before it could potentially go further down. So we've got all of the reason to do a longer trade, to do an 8R. It won't always happen, but in high time frame models, it makes more sense. You could even do what some people do and do the madness on the intraday. You know, I mean, for me, it doesn't really work very well. I'm not a big fan of low time frame. It just confuses my abilities sometimes. But see, here we've got an Asia session. I mean, some absolute madman. I don't know. I've never met anyone that this kind of works all the time with, but you know, getting on that extreme following order flow, and you could grab an 8R here. But I mean, realistically, how many times doing that? How do you know that makes sense? And you'd have to put a limit order here. I mean, when Asia swept really low here, and it printed. Normally, I look at Asia printing its whole lower high between 7 and 10, and it only works in particular circumstances. Didn't work here. It did work here. You know, you got the low of the day printed, and you got some nice low time liquidity. Here is the confuser one because you think, oh, maybe that's the high of the day, or maybe that's the low of the day, and then it sweeps further in, and then you've got this accumulation range, and you've got this manipulation, and then that happens mid New York, and then you've got this nice change of character and the extreme mitigated. So looking at low time frame stuff like this, you can use it with these trades if it makes sense. So see this one when it entered, because I would have already entered this trade. If I'd had a no tag or it's already entered, or I don't want to enter yet because I don't really trust it and I want some lower time frame confluence, this was an hourly setup and this was the extreme setup. So we could have looked now at this being the change of character between the lows and everything. I mean, it is technically here, but whatever, we can just say it's this one. Nice, easy. There's a nice flip, and there's the swing high has been wicked out of. So some would say that that's a trap, an inverse trap, meaning me. I will say that's an inverse trap because you can look at this as if people are bearish in the market, they think that's liquidity. So this is something I've learned. They think, oh, that's a nice sort of liquidity sweep on the other side of the market, meaning it's probably going to go lower. And they think, look at this, nice manipulation of the highs. But in reality, it made more sense for the buys here. So all these sellers are just getting trapped in the market, and all these SMC traders are getting trapped the other side of the market too. So you could look at that extreme as an entry point. You've got that New York, and you've got the potential continuation, and at 6:30 at night you would have had your entry. I mean, it's not a great time to be getting entries and stuff, but it is valid, and you could get a nice type stop on that and do a 5R pretty easily. And you would have got in and out, made a couple of grand quite quick. And then the following on after that, this is what I like to use low time frame for, is if you didn't get in that trade because it was late at night, but there's your entry and there's your target is the kind of 1 to 3 or whatever. I mean, we've already mitigated it, so it's kind of irrelevant now. But if you're looking at previous, where you want the target liquidity to go, so the target liquidity of this low and this pullback was this area, which it has mitigated and respected. So you can look at the 15-minute or the hourly, I would say is probably better from there, and do a higher up trade. So we could look at that break of structure here, and you could say quite nicely that it's broke the structure. It's coming to this extreme. It's following order flow. It's very simple, very easy order flow. I mean, you got this low here where the entry was, but if you look on the 15-minute from that entry with the direction in mind, it makes more sense. But doing these kind of things without having the principal understanding and foundation of direction on a high time frame means you're going to lose a lot. So here was that hourly break of structure. We've had the low of the day printed at 8:30 in the morning, so that is the low of the day. And we've had the New York continuation, which was broke structure, and at about 1 o'clock it created this high. You've got some nice low time frame confluences here for a change of direction, and it has mitigated that refined area. So you could even go, even if you want, if you're on the 1 minute and do all of that kind of stuff. But I don't like doing these kind of trade ideas because I don't need to, and it's a lot simpler just to do 1 hour and 4 hour execution. But I know these things are valid, but I'm at a stage now where complexity just takes over your life, and I have so many confluences for trades and then they don't work. So if you stick to the basics of that is the hourly setup, there is a very good, a high probability that the pullback is going to target that area, which we showed on the daily. So it is likely to be a demand chain. So here we've got the demand chain low, and we've got the high being printed. We've got a potential order here at 4 o'clock, going running for the next day. And if you really want to be ballsy on a trade like that, you can hold that shit to the next high and do like a 15R or something mental, isn't it? 20R. So there's the other style of trading which I know I can do. I don't like to incorporate it because it's very easy back testing it, but I've been doing stuff like that for years. I've never really knacked it yet, and I want to. Yeah, as I was saying, I want to look at it from a basis of where we're catching the high time frame trades, and then you can work lower. Because something I used to do quite a bit was try and master it. I tried to look like, oh yeah, we've got this pullback and it's a nice sweep and everything. We can look at counters. We can try and get in aggressively because there's a different set of rules for counters for aggression and how it's mitigated it and things like this. And you can look really closely at, I don't know, so it just complicates the market. So we can look at something like that. Wow, this is shocking behavior. And we can look at a really aggressive kind of sweep up, you know, into that area. We've got the printed high of the day and stuff. And it looks very easy. It's like when you see it in hindsight, it makes perfect sense, but it just gets confusing because that doesn't work all the time. It only worked here. How many other times will you be able to catch a aggressive sweep of high counter on a flip with this wick liquidity going into here? I mean, you think about how many times that actually works, and then like I wouldn't be sitting there saying I'm not making money if it actually worked all the time and I was, I knacked every single move in the market because I don't think that's possible. It might be, don't get me wrong, but in my opinion, I've tried it to death and it's hard. You need to keep it simple, keep it stupid. Look at like the high probable setups. Like this is all of this was daily, weekly, 4 hour based, and then execution on the 1 hour. And I showed you what you can do on the 15 minute here because it made sense with the buys and everything and where the position was, and maybe a 15 minute there and a continuation if you missed it. But it's not always going to happen that way. And anything here is just fluke. Like any buys you did there were fluke. Anything sweeping here may have been a bit more productive, especially like the buy we did here as well, like kind of following it. But when you look at it, when it reaches a level like here as well, this is something that um, I didn't show. I mean, we've had the supply mitigated here, so that trade that lost, it was technically valid, but it already mitigated the area where I was trying to take profit. So when that happens, a lot of the time, especially all the trades here as well, it already went to the point where I wanted to take profit. If you'd got in here and you had targeted to this high, it would have been fine. It would have been like a 1 to 3, happy days. Comes back into the zone. I mean, if it loses, it loses. But we wanted to try. There was no confirmation there either. That was more of a limit order. So the 1 hour change of character did not happen. So if you wanted to be safe, we would have prevented that loss. But for back testing purposes and the purpose of just putting trades on which are valid, I wouldn't necessarily take all the time, but they are valid. It's just, you could have slapped a limit order there because it has broke structure. Yes, we've mitigated the supply. There is all of this below, which you've got some sell side, you've got the extreme, which it did mitigate and actually go from, but that was still valid, and we could have looked at anything from the 3R into that rebound or anything up here as well. But it depends what you want to do, because my sort of plan of action is we've got the 3R, the 2R, the 4 hour time frame, the hourly time frame for execution, and then we have 30 pip and 60 pip SLs. Normally the 30 pip are the 3Rs and the 60 are the 2Rs. But what I'm trying to show you here is it doesn't always have to be the case. That is a nice fixed positioning for most trades and most ideas. And if something makes sense, even here, or say this one, for example, that is a nice area to do a fixed stop loss and a fixed risk reward, because you can't tell that the market is going to go higher. You really can't. It can just go here like it has done and reverse, and that could have continued. But one that makes a bit more sense to try and hold it is with all of these buyers in the market and all of that liquidity here has been swept into an extreme area. It's done a 4 hour change of character and tapped into the extreme again. It's just that is probably one of the last areas it's going to go for before it starts targeting the high time frame point of interest like here. And let's just have a look quickly just to see what happens. I mean, That might even be the last time it goes from there and it just flops off the face of the earth. We don't know. Oh, it's gone up again. Fair enough. So obviously we've got further introductions here. It's just kind of respected that demand and gone up. But something like this, it's good to contain profits, because if that had flopped further and continued, that would have just been a continuation of the leg from the daily. So it's good to contain profits. I don't really condone doing these kind of 5-10 hour trades without an understanding of what's going on in the market and where the market's likely to drive to on a high time frame. If you don't have that, stick to these. If there's enough evidence in the market to suggest you can make a 2 or a 3 hour regardless within that kind of intraday on the 4 hour or the 1 hour, and if you want to go even further into the 15 minute, you can. But yeah, just sticking to these rules alleviates psychology, alleviates pressure, because this idea of getting this 8 hours is great, but when it comes to psychology and you've got thousands of pounds on the line and you're waiting how many hours? That is a lot of hours. That's like 1st of November to that's 2 days of being in the trade, sleeping at night, having all of this bullshit go on in the early mornings and stuff, and having to really reflect on it and have the money go up and down, left and right, all around here, and then push up, and then you're like, is it going to go higher? Where do I take my profits? And if you didn't take profits here, you would have probably likely closed all the way back down here again anyway, because you thought, oh, I don't want it to go lower and all this stuff. It's very easy to do these back testing and get all these nice trades, but then you think about psychology, you've got to stick to something that gives you nice psychology like this, and then maybe on the personal, or maybe split risk on the bigger ones. But if you had split risk on here, yeah, you've got a nice 8R, but it would have been 4R anyway, because it's 0.5%. And then if you did the 3R, you got a nice 3R and 0.5%. That's 1.5%. So it's 5.5% anyway. So it's the same as a 5R. So you just got to think of it. Yeah, you got the 8R, but sometimes if you had just done the 1 to 3 twice, or maybe got in on 2 separate occasions here, with the reduced risk, and you got the 15R, you would have done 6R there with 2 1%. So you would have made more money than splitting the risk and taking that really, that 8R there. You would have made more money doing this fixed setup, just getting back in the market with confirmations on the 1 hour, than holding a position for a long period of time. I'd rather potentially lose the 2R, obviously I'd rather close this, or at least got in that, and then just gone again with this position here and took the 3R, because you don't know what's going to happen. The news could have not done that. This is just one particular environment where it was very profitable and it did target where we wanted, but sometimes it won't do that. Sometimes that candle would have been the opposite way and it would have took you out. So yeah, these are just things to think about when hypothetically looking at low time frame continuation trades from areas of high probable setups, and doing these 8Rs or the 20Rs and things like this. So I've just ran through most strategies, most what I've done in the past and the experience of it, and what I'm looking at now, which is this. So yeah, I'm going to end it there on this one. Hope you enjoyed the however many minutes of time I've been waffling, but if it helps, give it a little thumb up and chat shit in the comments as much as you want, and I'll try and reply.